This is Alan Bush with ADMIS. In the stock index futures, yesterday we broke a string of 6 consecutive days of higher prices for both the S&P and Dow futures. Today, however, we are seeing prices trading higher. This fueled by 2 better than expected economic reports. We had consumer confidence coming in much stronger. We also had new home sales coming quite a bit better than expected, over 18% of an increase. So stock index futures putting in a very good performance again so far today. We still feel that the main trend is higher, and this is a trend that will probably last for quite some time. Over in the foreign currencies, seeing the British pound coming under some pressure. This after the Bank of England governor indicated that now it appears to be more likely that a rate increase will come later rather than sooner. So that puts some pressure on the British pound. We had the Bank of England governor indicating that there is some spare capacity in the UK economy, especially in the labor market. However, longer term, the pound still is likely to be the best performer to the upside, as the UK economy still appears to be the strongest of the European economies. Also, we had the euro currency trading higher, even though we did get a negative report. We had German business confidence coming in on the weak side, in fact falling to its weakest level so far this year. So it does look like a weakening Eurozone economy is fully factored into current pricing in the euro currency. Longer term, we feel that the dollar index will work lower, as in our opinion the Fed will delay a rate increase. The pound, as we mentioned, should work higher longer term, and the yen is likely to come under downside pressure, as it appears very likely that sometime later this year, even possibly at the July Bank of Japan policy meeting, that they will be adding more accommodation to their banking system. Interest rate markets trading higher, holding up very well, even though we did have these 2 stronger than expected U.S. economic reports this morning. Normally, signs of a better economy would put pressure on treasuries, and yet we are seeing the 30-year bond remaining higher on the day. Longer term, still feel that the main trend is higher. We are right now in a 3-week congestion pattern in the 30-year bonds. Ultimately, I think we will break out to the upside. The entire interest rate complex, we feel, is in a bull market. When we do break out, it should be led by the long end, the 30-year Treasury bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.